Hi, my name's Justin Bergner, and I'm an industrials analyst and portfolio manager with Gabelli Funds. Today, we will discuss the electric metering market and the opportunity for distribution automation to drive revenue growth and margin expansion in what has been a challenging market. The top three electric metering players, Itron, Landis+Gyr, and Hubbell Aclara, comprise about 80% of the North American market, with Landis driving about half its revenue outside North America, compared to one-third for Itron and under 10% for Aclara. Over the last 5 years, electric metering has been a tough business in the U.S. and an even tougher business internationally. Each of the three major U.S. players has seen their North American margins demonstrably decline by a few hundred basis points pre-COVID, driven by the commoditization of products and the ability of electric utilities to force competitive bids. Margins have fallen another few hundred basis points during COVID due to semiconductor shortages and supply chain headwinds, although those headwinds should taper in the coming 1 to 2 years. Notwithstanding the challenges in North America, the metering companies make almost all their money here, with very low EBITDA margins outside North America, reflecting less advanced metering, more pronounced competition, and differing standards by market outside North America. Fortunately, the advent of distribution automation and stimulus from the Infrastructure and Jobs Act sets up the U.S. electric metering market for a better future. Distribution automation is an integrated solution of field apparatus, devices, communications, and software applications designed to optimize power grid efficiency and reliability. The foundation is a networked meter which enables distribution automation activities like load management and grid analytics of increasing relevance for activities like electric vehicle charging. The Infrastructure and Jobs Act, or IJA, passed in 2021, authorizes $3 billion over 5 years for the deployment of technologies for grid flexibility. If half this money directly benefits U.S. electric metering companies, there could be a $300 million annual boost to an industry that runs about $3 billion today. Specifically, the IJA should stimulate the adoption of distribution automation, and distribution automation should improve the margin structure in the industry. First, as utilities run applications on their smart meters, they will become more sticky customers for the electric metering companies. Second, the metering companies will have the opportunity to sell higher value-add products and services, including software and sensors. We like Switzerland-based Landis+Gyr as a way to gain exposure to the electric metering space. CEO Werner Lieber joined the company 2 years ago, having previously led BE Aerospace through its sale to Rockwell Collins in 2017. He brings a can-do attitude, an American management style, and a focus on commercial excellence. Landis has invested in recent years to narrow its product gap with U.S. leader Itron. COVID delays and the IJA not being passed until late 2021 gave Landis time to catch up. If distribution automation accelerates strongly, Itron should see upside as well. In recent years, they've not delivered the margins one would have expected, given their U.S. skew, their scale in the U.S., and a higher value-add mix of business. They have smartly decided to triage low-margin business, but in doing so create share gain opportunities for Landis and Hubbell Aclara. Finally, we also like Hubbell, although our enthusiasm is more driven by their exposure to grid hardening spend, with metering a smaller part of their business and a secondary driver.